Alive, oh, how are my wonderful followers? Blessings to you all. So here it is, a small commitment of lockdown love for the masses. Yes, so you are sitting at home. You cannot do anything. Your control structure is dictating where you go, how far you stand relative to somebody else, whether you can go on your beach outside your house, how far you must stand away from someone else in the grocery store. And you are being bullied, cajoled, and made to comply. And I'm all for you breaking those rules, never you mind. But anyway, I want to say to you that many of you will be sitting at home with nothing more than the internet webiums, and wondering what to do, what to think. Is there something productive that you can do? So the Market Sniper, which is the channel we are broadcasting from, will make the following commitment to the Lonely Hearts Club of those in pandemania, in lockdown mode, contained in the prison of their home with little movement. We will stream once at least every day during the lockdown period to come and give you both a smidgen of entertainment and a possible trade that can see you generate cash in reset season. Please understand that any trade is only my opinion at a time. I am not regulated. You should just consider it entertainment. That this has also been given to my beloved premium community, who I will always serve first for respecting me in terms of their continued support, and they will be in there first. And you can, if you wish, book a call to become part of that select elite snipers who march ahead of all the everyday infantrymen with the accuracy and the bravery and foreboding of HVF method at their shoulder. Anyway, let's tell you what I want to tell you. I was going to ask you one small favor, though. It's quite a commitment to every day make sure I've got something interesting and entertaining to say, and also helpful for your trading, because I am hoping that there are many among you that are investor stroke traders, and that you will not mind me wearing my sporting shirt and other non-suit regalia to chat to you on a daily basis, and tell you a little bit about what I think is going on in the markets and how you can make it. So can I ask for this one favor? Right now, you hit us up with a like to say thanks. I appreciate you taking out the time every day to bring us something insightful that you think is insightful on the markets, and share it to one other person that you know who is down the road and lonely, wondering what might be going on in the world and saying to themselves, damn, what do I do? What does all of this mean? And you give a little bit of that insight to them. So one share, one like, and then we'll be doing really great. Got 117 of you here on the Euro session. We'll have some Australians, I hope. Anyone from Australia? Come on, Aussie dollar. Come on, you guys. You know how to do free falling. Come on. Give us a like in Australia. New Zealand, the land of the thin white cloud. I'm hoping some Hong Kong, Singapore, Bali. We're picking up some great support from India to the Indians. Yes, the land of the sacred cow. Come on, you guys. Coronavirusing out along with the rest of the planet. What about those in Europe? You're up. You've had your coffee. You're on UTC +2, +1, maybe GMT, maybe the UK. You're catching your morning sniperdom. You're hitting the like button and saying, yeah, talk to me from the jungle, sniper boy. Tell me what you're seeing. And that's what I'm hoping to do. Yep, and then South Africa. Yes, we got some South Africans. Come on, lockdown in South Africa. So, little chat on that one. Our premium people have done exceedingly well on a little known metal called palladium. We literally bought the bottom on the beginning of this week. I say literally, not to the cent, on a beautiful inversion area, right down low. And we have an amazing broker partner called Scandinavian Capital Markets, which is European but outside the EU zone. Guess what leverage we got on palladium? 100 is to 1. 100 is to 1 on palladium, and it shot from, you wait for it, I've got to get this at least close to accurate because we were as heavy as we could get on that fella. Where did he shoot from? A little tail from the chest. This is what you're missing, by the way, during this non-productive period. In this non-productive period, which has been the most productive period, we've had an amazing array of new people joining our community that are getting straight into the learning. We're actually having record months. We are the counter-cyclical business of counter-cyclical. I've been walking through a desert for 13 years since 2008, preaching like a manic street preacher. I'm the John the Baptist saying baby Jesus is on his way and everybody is laughing at me. I am Noah building an ark when everyone says, what are you doing, you big clunking fool? That is who we are. And suddenly the rain clouds started to form. Suddenly a man of great wisdom seems to be walking the Sea of Galilee, and even on top of it. Suddenly the reset fantasy, the fantasy of buy the damn dip on every Dow plummet, suddenly seems to be a little unraveling. Anyway, so we got on to palladium. I tell you, no lie, at 1648, it hit a high of 2,411. Wow, were we able to get scaled? Did some of us make some great Tom? Yes, we're grateful for that. We say thank you, and we are not always right, and we recognize that, and we are humble. And we also remember that big periods of supreme overperformance beget future periods of arrogance, overconfidence, and losses. So we are humble. Hot money that has come quickly is not as solid as slow dough. You take your hot dough and you put it in some cold storage and you calm the hell down and you stop thinking you are a master of all things that walk. Yes, so a big talk down. You have to be talked down when you're up, and you need to be talked up when you're down. In other words, successful traders actually have a lower volatility of overall emotional states. In other words, you need to be less emotional, less fear, pain, greed, whiplash, bounce around than the average of the market participants. This is a HVF fundamental opinion. Not only do we trade based on volatility on the charts and in the specific markets, we also seek to manage our own personal volatility to a lower level than that which is being reflected of the crowd aggregate in the participants there. And the over-leveraged, the over-long that have been buying the damn dip and selling the damn volatility for the last 13 years become forced sellers. Even if they think they're brilliant traders, even if they've been non-stop winners on small scale every year, they suddenly have a horrific year because it is the unbundling of the fantasy economics that we are now seeing. So palladium being an absolute gift, you could have got it. We said we'll have a little bit of an easing back actually on the dollar beginning this week after killing it on the FX emergence last week. We've just been lucky. We've caught the memes and we're watching it. And that's been very fortunate for us. So what do I have to tell you today? 83 likes, by the way. Thank you so much to the 83 people that thought, what the hell, I'll hit you up. And for those 83, I'm expecting a good percentage would have found one mate to share this live stream on right now. 209 of you on. Thank you so much for coming and joining. I hope it's useful. I hope it's a little bit of live entertainment as you come. And more importantly, not just entertainment. I'm no professional entertainer. You can watch old Jonathan Ross shows and comedy and get your entertainment. I'm looking to bring you something of a bit of value. So having told you about FX emergings and how well we did 2-3 weeks ago, holding on that trade and leaning on the dollar strength in what was a dollar milkshake, then the bazooka came, the trillions came, and that put a bit of a brakes on the dollar strength. We pivoted into the metals. We did very well also on our gold and silver and called the ratio turning with a little Batman head, a pointy one ear, the final 128 ounces of silver to get 1 ounce of gold silver ratio. We said this will be a key turning level when it eventually comes. The extremity of the 128, which has bypassed previous levels, on the gold silver ratio leading into the subprime. This is why I've continued to say subprime was the tremor. This is the earthquake, beautiful people. And for some of you that thinks, oh, that's such a cack message. It's such a message of fear. Fear is reconstituted excitement. Excitement is the thing you should feel. The fantasy is over. The truth of what is being planned will be revealed. Position well now. Come out in a polarizing event a whole bunch better by using your brain. This is where smart people execute smartly, make smart decisions, and they catapult their wealth while the masses get shorn like a sheep. You go in this big with a nice woolly jumper, you come out skinny and frail with a little bit of fuzzle. Now, which one do you want to be? Do you want to be a sheep or do you want to be a sniper squirrel? Yes, scampering from tree to tree as the fire moves through the forest and making sure you're collecting all the acorns in this empty land. Everything is beautiful. I love being out of season. It's like being out of season in the holiday resort. Everything, there's no queues, the roads are empty. It's amazing. Okay. So I'm going to tell you what we were discussing yesterday in our premium community around the trades that will be interesting and hot for the days rolling forward, and you'll get a small idea. And as I say, do your own research. There's become this new acronym, DYOR, DYOR, Dior. Only it's not a brand of clothing. It just means do your own research. And as a result, you shall do your own research and you'll come to your own conclusions. I'm just giving you an idea as in a moment of madness. So you can have an idea of where we are and you can see, do those guys actually make any money? Do they have any good ideas? Will it win? Will it not? So what am I seeing? What does the soothsayer see? Well, I'm not a soothsayer. At the end of the day, it's a probability-based assessment on a chart. On Brent oil, well, I think it applies to both oils. That's WTI as well. But the one I'm choosing is Brent because the Americans have a little bit of a habit to want to support that which they create in their fracking industry. And the structure technically is slightly more preferable. On the great mighty Brent oil, we are seeing a dip further to the downside. And in fact, I will tell you how much we expect to come our way. Now, if you're thinking this man is biasing towards a further short move in the oils, you might also start thinking, what might be adversely affected by that? So with that structure of Brent being a little bit weak, I think limit sell orders a little bit above where we are now, which is looking at the chart, around $27. If you can get filled at $27 or 26.75, etc., you will be well served. Where do I see it dipping to? Well, we'll have a target in and around the $21 mark. Now you'll say that's not quite the $9 gap that you got. Well, it's already sold off a heck of a lot, as you probably appreciate. But can I also say something very important about that loss of another $6 approximately from around the $27 mark to the 21? A, you might get a little bit of an overrun on that. B, a lot of oil producers have a value cost levels in around where we are now and are close to cost. So the difference this makes is that someone who maybe, let's just say you have a break-even level price of oil at around $24 or $25. That means you go from just about making $1 or $2 and keeping your payroll going on a very lean staff run, and you're burning up a little bit of resources, you suddenly go from that small profit and burning up a little bit of reserves to quite a substantial loss and chewing through your reserves. So at the margin, when people say the phrase at the margin of producer cost, that means it's kind of like an option, which many of you won't appreciate, but as an option gets very close to being at the strike price. You know, just a small move means you're out of profit, and then suddenly a small move and you're through your strike price and now you're in profit. So that means it has intrinsic value, the option. In the exact same way, you're either losing money at the gross level, in other words, even before other expenses, or you go a little bit higher and now you're making money at the gross level and you're going to have a net profit and you're actually covering and you're burning through reserves far less because you'll be able to cover some wages from what you flow. So at these levels, a critical $5, $6 move is most unwelcome for the marginal provider. Now, many of these oil companies, and this I'll leave to you, go search their typical break-even gross level, cost level. Ones that are in and around the mid-20s right now will go from just about making a buck or two and keeping the wolf at the door with a bit of borrowing from the gross level to the net level, will now go to loss-making. So just by staying open, they are burning cash. Yeah. In other words, you're generating, it's taking you just on fixed costs, you're generating a barrel of oil and it's costing you $26 and you're getting in 21. That means every barrel you do, you're burning $4. Now, these guys do millions of barrels in a day in certain big scale operations, and certainly hundreds of thousands for many medium and large-ish sized oil companies. So go and re-look at some of the oil companies. I actually have no oil equity shorts. I'm trading the actual underlying market, and Brent will be a short for us on any rally, and it's around just under $27 at the moment. So that's idea number one. Let's see what everybody's response is before I roll into idea number two. How do you feel about USD Korean won in the short term? It's a good question. So this is the interesting aspect about the Korean won. It has triggered, broken, and then pulled back. And this ebbs and flows because there's two aspects to a currency trade. One is the won, the eventual forthcoming weakness that we foresee. That has not materialized yet. It's been slipping slightly. That saw it trigger. The other is the dollar itself, which then recently announced all these multi-trillions of we'll do everything. They had their ECB moment. We'll do whatever it takes, in essence. We'll buy liquidity. We'll buy corporate bonds. Basically, this is what's happening out there. So it's a good question, this USD Korean one. The whole world is going communist. In other words, government is entitled to take your money that it gets in from tax revenues and borrow money in your name that essentially you owe the interest rate payments for to some central bank that creates the money out of thin air, and to go buy up shopping malls, for example. So here we have a little headline, Into shopping malls owner says most of its tenants are failing to pay their rent. Later on, Intu's mentioned again, will need bailouts. If you are facing financial hardship due to the ongoing coronavirus pandemic, requesting a credit limit increase, all of these things, it sounds like kindness. It sounds like kindness. Your government cares. This whole game is a killer of small business. This whole lockdown of a pandemic. And you read the great Four Horsemen of the Apocalypse from Jim Reichard's Aftermath book, and you hear about mass mobilization. You hear about warfare. You hear about pandemic. Funny, it was written a year and a half ago, 2 years ago. And you read about the government buyout of everything, riots and social unrest. And I think we're gonna tick the box on potentially all of them. That doesn't mean you have to. Anyway, so the USD Korean won trade means it's a thing of timing now. So as the dollar has been suppressed, it's unlikely to move now. So I actually had one account that I dedicated entirely to the Korean won trade, and it's done pretty boringly. All the other accounts, some of which, especially with our SCM and our leverage and getting a number of the key moves right, have actually gone up 10x. because we've been able to scale and be really accurate. And I've been aggressive because there's high confidence there. That's not for everybody. The Korean won is flat. Essentially, it went up and then it's come a bit down. In fact, I've trimmed some of the Korean ones and I put some of the other things because I realized it's not yet ready, even though it has triggered. So it will come, and it will come suddenly. So this is one that will just be a spike-based event. And it's not what I'd call an emerging economy. It's not like the peso that's already lost an immense amount. It's not like the TRY. You're talking about a country with very smart people, very tech literate people. That doesn't mean the other countries don't have smart people. I'm sitting in, all sorts of nations have smart people, but you might have corrupt governments and all of that. They have real big tech like Samsung, et cetera, in there. But when it comes, it'll come quickly, and I think it's going to be later stage. We've got to have the emergings first. In other words, the Korean won is a higher status currency than, I suspect, the peripheral currencies. So unfortunately, the Rand, the Ruble, all of these are going to have their problems first. Actually, the Ruble doesn't have the great debt. The Ruble's problem, which brings me to the second leg in the trade, which our guys have been putting on their entries, and you will be late. You could be early to these trades. Thank you, 335 of you. Big thumbs up, I appreciate it. And 138 likes, that's more than a third. If you hit us up with a like, you encourage me to come back tomorrow and tell you my thoughts about the market in these lockdown, quiet times where you've got nothing more than an internet connection and at home. I'm going to commit to keep you, come in and check in with you every day to give you a little bit of a lift, by the way. And if you want to be part of our community, links below, mini series for free stuff. You never get spammed. We never sell our list. Okay, so you've got shopping malls here that are going to be pleading, being seen to do the kind thing. Okay, we're not throwing anybody out. They don't want an empty mall. Everybody can't pay the rent. They close down. So by closing down small business, they make it a bigger business corporate problem. The owner of the mall is the medium-sized business operator. The small business, the lady with a hairdresser in the mall that hasn't been able to work for 6 weeks and already had declining revenue, etc., is facing a massive problem. She's lost her cash flow for 6 weeks. Largely, in that example, let's say she's a single mother as well, and and her mum babysits her daughter and son when they finish school. They devastated. They would have had 6 weeks of reduced revenue. Now, can I also say, beautiful people, we did a tweet 52 weeks ago, and I have mentioned this, and I'll mention it again very quickly in case you were watching the last time I mentioned it. And that said, in 311 days following the yield inversion is the typical time for the recession to commence. So before already this pandemic narrative came about, and whatever we are meant to believe about it, and all the lockdown and the financial economic reactions to it, before all of that, we were already in a recession. And I saw it. I spoke to waiters and managers of restaurants. They'd laid off people after their high season in summer in the Southern Hemisphere, on the basis that the high season was low and it fell off a cliff straight after the holiday period was over. The kids were back at school, and it was even down to a lower off-season period. And they pulled their claws in. And then the pandemic came. So this is designed to kill small and medium, which has a knock-on effect on the medium large. The shop, if you're a guy who owns a shopping mall, you're no longer a small businessman with a hairdresser or a cafe or a restaurant. You're now part often of a mega corp. You might a corporation that has many. Now, Intu in the UK seeks debt waivers aid as rental payments sink, says Reuters Business. Reuters, you all know all about them and who's behind them. UK retail sales fell in February on flooding and transport disruptions, says Bloomberg. So there were other reasons why in more than a month ago, before this had escalated, they were slowing down as well. So what you actually have is we were going into a real recession anyway, and they've decided to make it a super big one and tip the bus properly over. And as a result, this means everybody wants relief and everybody now wants debt. And then, of course, the banks can't be seen to loan on an unsecured basis to people for the pandemic crisis without being backed by the government. So suddenly now government backs banks that suddenly own all these, because if they lend, they have to have equity or failure, or they will fall into ownership when they fail. So eventually the people come back to work, and everybody is starved of cash, doesn't spend. The roll-on effects, it's not a binary thing that you just switch the light back on. Everybody goes back to the hairdresser. She's going to have an empty phone book. The last thing most of the ladies are thinking are blowing their cash on getting their hair done. They haven't earned in 6 weeks, 2 months. So everybody is going to be very, very slow before they start spending again, because they've got nothing. They've been buying tons of toilet roll and other unnecessarily binge buying stuff on just the Maslow's hierarchy of need, the lower level, which is my shelter, my food, and my whatever. So no one's thinking of buying a sports car right now. I must head down to, Ford and buy the GT40 or something like that. So all of these things are going to take a long time for confidence type buying, aspirational, higher Maslow hierarchy of needs things. So this is dramatic. So the fact that you do this for 6 weeks or 3 weeks even, the effects running into it, the slowdown that was already in place coming before. So actually you're going to have a devastated quarter. So it's just a hard fact. So they're going to stop Spain, France, Italy, certain places have already said that certain companies may not be shorted. In other words, it's cruel. It's cruel. Be a patriot. Don't do it. Actually, there are hyper-valued companies that deserve to be shorted, and they want to stop the retail guy from being the guy that makes the money. They need retail on its knees and everybody needing cash. That's how they own you. And then they say, government will provide. And suddenly government is daddy, your daddy, and you must sit at his knee and you must do like daddy tells you. Otherwise you get a flip in hiding. And government has police forces out to enforce various rules, and this is what's going on. Anyway, that all triggered a little bit of lots of everything on the macroeconomic from the USD Korean won question, and I think I've answered that. So it will come when it's ready, and I think it's going to be later. So we collapse from the periphery in, and we're going to have a dollar surge again, which will return, in my opinion. We've got targets for Ruble, we've got targets for a number of things with setups that are very, very reliable, that have yet to be made. So there will be a next stage where you have dollar surge. And the key moment will be when metals go up at the same time dollar is going up. And that'll be key. And when that starts happening, you also want to start watching Bitcoin and crypto again. And you also, by the way, availability, you go to zero hedge, you have a look around. People are out of gold and silver, So get your hand on physical any way that you can, lovely people, because you might not be able to. And owning it and holding it is probably one of the best things you can do. Okay, so 401 of you and that almost 200 likes. That's 50%. That's super high. I really appreciate that. Do the likes and I'll come back. Keep it at 50% and above, and I appreciate it, and I'll come back every day throughout lockdown day. So the trade is, in my mind, for what I am doing right now, short Brent, which is the UK oil on your trading view, for those of you that are using that platform. It is not the US version, it is a cleaner oil, and long against the ruble, either the euro ruble or the USD. So why the euro? Because I'm not a huge fan of the euro. I'm not a fan of any fiat, to be honest, but actually there might be a period now where the euro has a little bit of a rally back against the dollar, and the best structure for our setup is actually on the euro against the ruble, which means the dollar might be still for a bit sustained weak. In other words, these guys have printed a shit ton and are pushing it down the pipes wherever it's needed. Possibly even more than they say. They're never honest. They'll just, some future announcement will just backdate stuff they're already chucking in. So they've gone into mega panic mode. You don't know how bad it is, the truth be told, behind closed doors. also with regards to the inavailability of metals. So let's have a look at a couple of your comments. Russell Vontenaar, what a cracking name. Dean Russell Vontenaar. Now, what does Mr. Vontenaar say? Oops, I lost it, the comments. So true on the Maslow needs. Yes, Dino, absolutely. Fake patriotism will kill people, says Sangolis. Is absolutely right. Fake patriotism, short. If it's broken and it's crooked and it's hypervalued, short it back down to the floor where it deserves to be. Make sure you take out the cash you deserve for this crooked, bent, debt inflated scam of a system that these bastards have created. You owe it to yourself and your family to get that cash out of that market. What are your targets for the peso, lira, and rand? So I don't have those at hand for you, but what I can say for you is that the euro ruble will be an upbreaker, and this is how I'll trade it. I've got both the USD ruble long and the euro ruble long, and I will close both when the euro ruble meets its target. And I will quickly have a peek to see if I have my draw up for the euro ruble. And let's just see it. So I gave you the target on Brent down to $21. Euro ruble, and much more finer detail and earlier detail for the best risk rewards is available to those in my premium community, which we were talking about yesterday, and I briefed and further. But we're looking for around 91.85, 91s, you will run to 91s for the euro ruble, possible over performance, currently trading 85.79. 85.79. If you think that's not a big move, work it out in percentages. And with our amazing broker partner, we get 100x. Yes, I've got a big line of that. So remember, I'm also talking through my pockets in terms of my trade view. I and my community may already have substantial positions in this. So we are blinded. We are blinded by our own book. But before we put them on, we tried to avoid being blinded because we were neutral, and we said, stress test this idea. And we said, for this to be good, the oil might need to go down. Ooh, the oil looks kind of in a nice structure too for downside, as does the ruble for upside. This seems to be making sense. We're getting cross-referenced gains. And then we had a look at the CAD because, as you know, Canadian also has oil, and actually the CAD looked a bit oversold. In other words, USD CAD had gone too far up and far more convex. So while you might get a little bit of an up move on the CAD, we think the best gains will be on the ruble, and we think the CAD looks a bit toppy, even though it will probably have a rally on the loss of oil, depending on how fast and brutal that happens. So our preference is the ruble, not the USD CAD, which is also another oil denominated place. Of course, it's not the only place with oil, but it's with big major currencies that are liquid that can be traded. It certainly is. Let's have a further look at those comments. I get Japanese, what's going on, says Willem Santos, with lots of pink cherry blossom icons. Hans Danzig, the market sniper, they put people for 5 years into a gulag in Italy for breaking the quarantine. Yes, it's outrageous. 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 That is state overreach and absolute dominance on the name. So the big theme that comes out in these times is that your personal rights and your personal privacy is always superseded by the needs of the greater good. This is how they install communism on you, until everybody is on zero in salary and government gives you a biscuit every day and everybody gets a biscuit. That's your global communism. Because your need to the wealth you worked hard for to build is now better served being distributed by a government that sits and eats most of it and then distributes a small bit to the many millions. And that's how you aggregate everybody down. It's known as the great leveling. The great leveling. It's kind of like that rolling pin. The government sits there and there's lots of little people squealing, some of them that have worked much harder and earned much more. You get crushed under the rolling pin. Everybody must be flatbread. Flatbread, dour, dour flatbread, sourdough. Sourdough, there'll be a bitter harvest of sourdough flatbread as he rolls the rule of government, rolls the many people so they are all equal and flat. And then in an Italian twist of the wrist, flicks into the air, the flatbread, for later, the Holocaust baking in the clay oven, so that you may be consumed by relish, with relish by others. That's right. Any thoughts in Bitcoin? Any thoughts on Bitcoin's price? I think Hobart Zana is asking. So as I've mentioned, BTC will probably limber up slowly whilst the dollar weakness period is on. Let me just have another quick check-in on BTC USD on the chart while it's in front of me. Touches nose, touches face, passes coronavirus on. Sorry, I didn't mean to do that. So a little bit benign. I think it's slight bias up, but it's not sparky. It's not super sparky. Could have a little bit of an easing as well. It also ties a little bit in with the anti-fiats. It hasn't been as buoyant. We've got to remember it did trade 4K and it's sitting at 6.8 now. So it's certainly not too bad from the extremity of its low. But it's kind of, it broke at 5.2, 5.3 and made its target to the upside. And now it's setting up and winding up a little bit. And I think it could go higher. I think gold and silver are an accumulate. And I think that means also, and people get so pissed when I compare gold and silver to Bitcoin. They are entirely different. We absolutely understand that. But right now they form a category of when the dollar does bad, they do good. Okay, they form a category of that. And when everyone first has the fear and craps the bed, they're all sold off. Bitcoin and silver and gold, particularly silver. Okay, so it makes silver a high beta version and very close in some ways to what is a more volatile crypto. So gold is an accumulate for me at the moment. It's a very nice little pullback, very gradual supported pullback at 1607. Grab it in my views. That will make probably silver good too. XAU, XAG. And how are we doing on those likes and shares? You have no more friends that you wish to have a little bit of company for. Yes, so the XAU, XAG actually looks like it could spill a little lower on continuation downside, which is bullish for both silver and gold, especially for silver. Okay, so that's my take there for both Bitcoin and everything else. XRP, I'm not looking at the moment, Joseph. Sorry, I won't be able to give you an opinion. I'm not particularly, it generally underperforms Bitcoin so far. There might be a point at which it suddenly changes with the IMF, but I don't try and antagonize XRP fans, and I don't try to also mislead them that I'm a big fanboy. I'm just saying that generally it's underperformed and is shedding market cap faster than Bitcoin and Ethereum. And technically it's not impressing. I haven't looked at it in ages though, so out of fairness to you, I will take a quick run by to see if maybe you've done me a favor and there's something almighty interesting in there. But I'm not expecting to see too much. Actually, yeah, it's not looking too bad as well. But Bitcoin and XRP are both, I think the crypto as a whole, and XRP will be part of that, are setting up a macro upside continuation. So I think if you are a holder of XRP, there will at some point, not too distant future, be some good news coming away. And it's actually quite nicely set at the moment, but it might need a little, it could roll over and come down one more time, or it could set up from here. So there will be upside for XRP, but that's kind of how I feel for Bitcoin as well. So I'm seeing both being at some point having a move up. And you may have met your low. Don't forget you traded at 11, 0.11. We called that. We said it's going to get worse for XRP, but it got worse for Bitcoin too as well. And we were almost a bit shocked by how the whole crypto had such a spell. We didn't realize how much of the traditional trading world was there that we would crap the bed. We thought we'd hold that 6.4, but that was our predominant bias, and that was overrun by the panic. This also confirms to me how serious this is, and that there already was some money from people that are in other things in the traditional market. This is why you have to analyze, guys. And this is the great value of our community. Yes, we have a crypto room. We have a crypto WhatsApp board type structure where we talk specifically crypto. We have a traditional markets, FX, commodities, equities divided in it. But the key aspect is you also have to look at them all and see where they are. And the crypto's time is coming. And also when the real reset and the lockdowns of banking and all the other things that I've spoken about start to take place, crypto could be the saving grace for many people, generally, which will mean XRP, Bitcoin, and any other coins. But yeah, so Apple, says Barry. Apple, come here with me, says William. From Mexico, please USD pesos. So Mexican did have a period of strength, but the long term, I'm afraid, is weakness. The long term is a mooning of weakness on the peso, the TRY, the ZAR. We have not near finished the FX emerging route. It's just pausing now. So I'm afraid bad news for the Mexican peso, bad news for the rand. There will be pauses and even pullbacks, but the bigger journey is higher. Bad news for the ruble if you're Russian. Bad news for the TRY if you're Turkish. So, you know, I'm not trying to upset my Mexican friends. It's across the board. I did a YouTube on Aussie, so that's pretty much all my thoughts there. Oil, WTI, could I get your take on Apple, says Barry. Barry really wants to hear about Apple. Okay, let's help Barry. There's anybody who types the same question so many times. I can only get to some of the questions, guys, and then I will finish. So Apple. How does it look? Look at that. That palladium will only fall so far. I was watching it. I said, you'll never get me to sell my position, and I will try buy some more. And it just came off a little bit, and then boom, pumps. Very strong metal. It's rewarding our community greatly. So there's been two push-up backs on Apple. You had your dip to the 256 and it pushed back to 303. Then there was another huge leg down when it went from 303 to 213 and it's had a pushback to 254. So you had your first selling leg, you had your rally, you had your second selling leg, that's your third, and now you've had a rally, that's your fourth leg. Elliott Wave says there's a fifth leg that's to the downside. And it will run a new low. And that your third leg should have been the biggest leg, and it largely was. So it ceases to be a $1 trillion market cap. When we started to have all these companies making $1 trillion market caps, I tweeted out at the time, a sign of the times, remember this, the excesses are here. Such high number of $1 trillion market cap companies, suddenly all becoming heroes and unicorns of such scale at these levels. It's insane, the valuations, and so many of them. I think only Microsoft has held on to theirs for now. And it's perfect, Elliot, since it's sold off, because the third leg is bigger than the first leg. So the fifth leg will not necessarily be as big, but then you could have a rally for a while and then we'll have another 5 leg down. So it depends how extreme and how far we go. So also keeping you up to date with the control structures tweets. India, so the shock of coronavirus could split Europe unless nations share the burden, The Guardian. The shock of coronavirus will split Europe. So this is going to be part of the Euro USD failure. We've done very well on weakness on the Polish zloty. So to my Polish friends, unfortunately, they've also seen massive amount of currency devaluation. Okay, good. So final questions. Let me get that live stream back up. Where are we? Any final questions before I sign off? Give us all a share, please, if you would. Final questions in. Why are you coughing? Thorsten van Buchter. Did I cough? I don't know. Maybe I did. Maybe I'm isolating my coronavirus. Hong Kong dollar peg to break. In my opinion, many pegs to the US dollar will come undone with a dollar milkshake super spike. So even though we weaken the dollar and everyone's thinking, yeah, it's weak and it's crap and it's fizzling and all of that, it will reassert on debt problems. So the Hong Kong dollar peg will break. Phil Card, HSBC. So individual banks, I think banks will hit extreme lows, but they will be bailed, as we know. So yes, bonds and all sorts of debt allocations. So banks will be very weak and will sell off. Phil, what shall I do for 10 pairs? For 10 pairs like GBP, JPY. So the final idea that I'll give you is that we've been watching USD yen and we went short yesterday, and I reasserted it internally to the community today. And the USD JPY is turning, and I'm also short the Euro JPY. So when the real fear hits, watch the yen spike strength. But it's a widow maker, because if you don't take off, it can slash right the way back, as you will have seen. So JPY is the other idea. Silver Oz, yes, it's one to hold if you're Australian particularly. Greets, much love, says Sylvia Lovick. Thank you, Sylvia. Nice to meet you. You're a legend, mate. Thank you, Phil Card. Can you give me an idea of the Canadian dollar to gold and USD? You have many people following you here. God bless the Canadians. I have empathy for you, for that miserable man-child leader you have. Of course, it's all part of the control structure. It's not your fault. They get to put in whoever they want, and I don't hold you accountable for that anymore than I would myself or any leader in the country I'm in. Take on platinum is an interesting one, so I will answer platinum. So CAD is going through 1.6 to the dollar, in my opinion. However, I'm assessing that it's oversold right now and could have a period. The oil will get worse, so it will soften again. But then at some point it might ease back down. But in the longer term, 1.6 with the FX emerging. It's not an emerging, it's a commodity dominant. Unfortunately, it's got a lot, Alberta oil and all of that. So through 1.6, the CAD. Platinum, I'll give you an answer on platinum. Let's do that. Because it's the great laggard, platinum, and it's the palladium substitute. So it will be my pleasure to answer that question, because it was something I've been thinking and I didn't have time to have a good look at. USD. At some point, all the precious metals will be very strong, in my view, including the great neglected ones. And you might find you have better availability of platinum when you can't get gold, and palladium as well. So it has had a snap bounce from its extreme sell-off. So it went from 1,050 odd at one point and smashed right down to a super low value of 564, which is unbelievably cheap for platinum, in my opinion, in these diminished dollars. It's now at 724. I would trade the relative strong ones first. So we are in palladium. The time for platinum will come, but it's still underperforming. So it's a bit like why buy the most technically underperforming crypto when we start to have a rally? Go for the relative strength and rotate. They'll each have a chance to run and be a front runner and get their mojo back. So stay with the ones that are strong and rotate into the weaker ones once they start stirring and the strong runners start slowing. So platinum will have its day. It's not yet the case. It's bounced relative to its spill. It's not as spectacular as palladium, gold, or silver. So not yet for palladium. Okay, good. That's me. Last final question before I say my goodbyes to the beautiful people of the world. If you've enjoyed this and you would like me to come on again tomorrow, the next day, and brighten up your lockdown moments, I will happily do this. All I ask is hit up the like button, hit up one share, and if we get real support out of this, that it's worthwhile, because it's just reach is what we want, and we want to spread a message and give a bit of inspiration. And there's no scarcity, guys. Don't think, well, I'll keep it all to myself, because then the others don't know, and then I have the little wisdoms to myself. Like Richie Rich or Gollum. What has he got in his pockets? No. There's abundance out there. There's abundance. Don't believe these control structures. There's abundance. We should all be living a well-fed, bountiful life. There is abundance out there, and we don't have to do it. Who's John Galt, says Skynet. Yes, indeed. Yes, indeed. Batman predicted all of us. The Aussie drama, ha 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 ha. Okay, good. No, I don't see. Let me see. One more question, and then I'll call it platinum on bullion vault. A good idea. I would go with gold and silver for now. Unfortunately, I don't think Bullion Vault has palladium. Some do. Is Ruble a good pullback buy? So we were in the Ruble for a big move. On the longer term run on Ruble against the dollar, we are saying minimum 94 and probably 96 and even 100s to be run as part of a blow off over performance when that second stage dollar shortage occurs, not strength, dollar shortage. It's never strength, shortage. And at that point, you could possibly have metals going up at the same time, even faster. Anyone have data on ink paper going into printing presses factories? Yeah. I'm 25 years old, says Santos. Well done, great age. Make sure you get to 55 and you are the wealthier for it. Dollar index, another leg up after this pullback, another sip of the milkshake. Yes, Fala Koala. I like Fala Koala. What a great name. What a great name. Who couldn't like anything with koala in it? Irish housing. Australian housing is terrible. Irish housing, I don't have a view on. Loads of people joined the sniper team. Go to the links below, guys. Loads of people, good people, interesting people, committed people that see that there is real money to be made. Guys have been making, especially with SCM leverage, if you're right, and it cuts both ways, leverage, guys have been making the entire course proceeds back in single trades and going on from there. So cheap oils equals war, possibly, Phil. Euro SEK. So Norwegian kroner, by the way, is another one that is badly affected. NOK, N-O-K, by oil weakness. We just don't have as many nice quality setups. It's been bleeding up the whole way. So my friends from Norway, I'm afraid it's not good news for you. That's it. Okay, that's it. I'm calling this an end. Hope you enjoyed it. Thank you. Have a great trading day. Remember, this is not a recommendation. We are not regulated. This is me talking about my stuff and a bunch of other people that also happen to be of a similar mind, opinion, and are selecting their own trades from that stuff. So have a great time and play safe. And we'll see you tomorrow. Share it and like if you can, and grab the free mini series if you haven't already. And also book a chat below if you want to become part and get these trades early when they are occurring, and learn, more importantly, because at the end of the day, we're in education first. The skill set of being able to move and do this for yourself and develop and understand what you're doing. It's not a trade feed environment. Okay, all the best. Love you all, and thanks for coming on. Bye-bye for now.